I knew that you could raise private capital from individuals, marry it with a great real estate deal, stay in the middle, and as long as everything went well, everybody made money. Now, anybody I work with today and coach, I teach them you shouldn't be in a deal unless you're at 65% minimum leverage, because you need to have that equity. You need to have that piece, right? So if a syndicator comes to you and brings you a deal and they say, oh yeah, we got great bank debt at 80%, run the other way.
Let's start it. Come on, Mike. Come on up here. There you go.
Going this food?
Oh, I got you. You're good.
Okay. So, just so you know, if I grab this is my vodka, just to loosen me up a little bit. Hey, so I know Colin kind of told the story, but this is the first chance that Robert and I have had a chance to meet in person. A couple people here that I've talked to before, Nick, and that we've never met in person before. But Robert's been gracious enough to come out from Chicago, hang out with me, and come to the event. So,
Go down a little.
okay. Hey, so tonight we're going to talk about what not to do in a changing market. Some of you I've had a chance to meet and talk with and get to know a little bit. Others of you I haven't. And if I haven't, please come and introduce yourself afterwards if I don't scare you too bad. Because I'm going to tell a story tonight that, you may have some questions about, wonder a little bit more about. So I always say that I'm humbled to be here, right? Because for me to come and be able to tell my story, share my experiences, share some things to do, some things not to do, how to look at markets, how to look at deals, how to look at people you're in business with, really makes a difference and is important. So today I'm going to bring light to the 5 mistakes not to make in a changing market. And Ali, where's Ali? We may have a little bit of a difference of opinion because I feel that we're on the backside of the market and that we're going to start heading up. I've been in the business for 30 years, and I'll go through a lot of my bio and my story tonight. I've been in the business for 30 years. And for the last 3 decades, I've always said, boy, if I could just get in the market just before the tide changes and do some things just before the tide changes that I would have the wind at my back. And that's right where we're at right now. We're in a position right now in the market where if you're a real estate investor and you've been sitting on the sidelines thinking about getting in, wishing you could get in, now's the time. I don't think we're going to ever see a better time in history to invest in real estate, much less multifamily real estate. You see that statistic that we're short. We have a 6 million shortage in housing. That's a big number. The problem is that prior to the pandemic, we were at 4 million. And today we're at 6 million because we got even further behind during the pandemic. So, housing is an issue. And then affordable housing is even a bigger issue. So all things that you need to take into consideration and take a look at. But tonight I'm going to tell you a story that will bring some hope and some inspiration to you. The whole point of my story is that no matter what's happened to you in your life, where you've gone, what you've done, you don't have to let your past dictate your future. That tomorrow's a different day, and whatever you choose to do, you can do differently. So if you heard rumors about me, those rumors are true. Tonight, I'm going to eliminate any need for you to do a background check on me or to see, if I'm real, because I will be perfectly honest with you. So before we get started, I do have a gift for everybody. If you want to download that, that's a book, ebook I wrote, just that I work with a lot of passive investors. And this will, give you some guidance, some direction. I was talking to a couple of people before the event, and their questions are like, "Hey, how do we invest? How do we know who to invest with? How do we know what to invest in?" And I think I put some things in here that may be helpful for you. I don't know if you heard me, but you and I might have a little bit of a dispute about where we're at in the market.
Okay, great.
Because I know your belief is that we're still going to go down, and I think we're at the bottom and we're going to go up. And I think that the multifamily market for the next 10 years is going to be on a run.
Hey, I won't complain. That'd be
So, yeah, right. Okay. So many of you might think what I talk about tonight might disqualify me from what I do, but really it qualifies me for what I do. So I want you to really think about that, because I'll tell you a story. I'll get into some things tonight that, you may question in your own mind. But I really believe that when I'm done tonight, you'll say, you know what? He's right. He does qualify. So, been in the real estate space for 30 years, hadn't always been in real estate. Matter of fact, I have to ask myself sometimes, how did I get involved in real estate? And I remember I was 8 years old. I was on family vacation, and I remember sitting on the side of a swimming pool with my dad, and we were at a resort. And I remember looking around at all the rooms that faced the swimming pool. And I asked my dad, I said, "Dad, what are all the rooms for?" And he, in his infinite wisdom, said to me, "Well, people come here and they pay the owner money and to stay here." And at that moment, I said, "I want to be the owner. I want people to pay me money."
yes.
And, so fast forward a number of years, I'm in the real estate business. It's funny how we manifest things in our life, right? And how things show up. You could think about something today. How many times have you thought about buying a new refrigerator or a washing machine? And, you put it off, and then one day it happens. I live in Southern California in Huntington Beach, and I lived in Chicago forever. But I came to California for 20 years on vacation, and I came out on business 3-4 times a year. And I always said, boy, I'm going to live in Huntington Beach one day. And 3 years ago, my life changed. I just pulled the plug and moved out. So, I think that we manifest things in our life. So, you have to have a picture and visualize things. So here's what I'm going to do. Tony Robbins talks a lot about visualization, having a clear picture. So what I want to do right now is I want to give you guys a clear picture. So if you're comfortable, I'm going to ask you to close your eyes, and I'm going to walk you through a story and a situation, help you see things a little bit differently, and I'll tell you when you can open your eyes again. So here's what I want you to do. I want you to picture yourself on a beautiful spring morning, early in the morning. You're sitting on the back of your deck, maybe the front porch of your home, just drinking your coffee. And the birds are chirping early in the morning. You can smell the fresh cut grass and the landscaper next door cutting the grass. The dew is still on the lawn. It's rising off the lawn. And you're just sitting there having your meditation, your quiet time. Maybe you're reading some scripture. But all of a sudden, you start to hear some noise from the house next door. And the noise starts getting a little bit louder. And now your curiosity is risen. So you get up, you walk around the side of the house, take a look at what's going on. And what do you see? 5 or 6 black SUVs pulled up in front of your neighbor's house. Several men and women in black flak jackets running around. On the back of the jackets, it says DEA, FBI, ATF. Now, at this point, let me ask you, what's going through your mind? What are you thinking about? Are you prejudging? Are you starting to prejudge? Because that's our human nature. That's what we do. is we prejudge. The next thing you see the husband, your neighbor, being shuffled out of the house in handcuffs, shoved into the back of an SUV and driven away. Now what are you thinking? Oh my God, what did he do? Maybe you're thinking he was up to no good. I knew it all the time. Then all of a sudden you turn around and there's his wife and kids standing in the garage in tears, wondering what the hell just happened to their life. Now what are you thinking? Are you still prejudging him? Or are you looking at them with a little bit of empathy and maybe saying, what are they going to do? So go ahead and open your eyes. We'll come back to this in a little bit. But, we have this nature to prejudge people before we know all the facts. And I think it's the same thing in our investing, right? We think we know the answer without getting all the information, without getting all the facts. I told somebody earlier tonight, I said, there's no geniuses in the real estate business. There's only market cycles. And where you're at in the market cycle depends on how you're going to do and how well you're going to succeed in the business. So here's what I'm going to talk about tonight. So I'm going to talk about these 5 mistakes that I've made and how you can try and avoid them and the lessons that I learned as a result of them. How long do we have? So midnight? Is that when they close? Okay. Making sure you're all still with me. So I've been in the real estate business for 30 years. I told you how I got in the real estate business. That simple little lesson from my dad back when I was 8 years old. Prior to that, I was in the general contracting business. I had a construction company. We did 25 room additions a year. Are there any entrepreneurs in the room? Okay, so let me try again. Are there any entrepreneurs in the room? That's right. I think everybody's hand should go up. See, as an entrepreneur and as running a construction company, I took care of all the marketing. I took care of all the sales. I took care of meeting customers, ordering material, bidding jobs, putting contracts together, selling those jobs, hiring, firing, and bookkeeping. And I was still in the field banging nails. I kind of burned out. I can actually remember waking up one morning going, I can't do this anymore. So fortunately, I had somebody knocking at my door to buy my company. And I was fortunate enough to sell my company. And I said, I looked at my wife at the time and I said, you know what? I'm going to take a year off. Well, like any good entrepreneur, we never take time off. Our mind is always spinning. We're always trying to do something. So what did I do? I go and buy two flats. We call them 2 flats in Chicago. I go and buy two flats to rehab. And I rehab them and I'm working. And I thought, God, I was going to take time off, but I fell in love with this business. And along the way, I met a real estate agent, extremely successful. And I went to him and I said, Todd, I think I'd like to go into the real estate business. And he said, I think you'd be great at it. So he encouraged me to go get my license. And during that time, I went to him and said, hey, I'd like to come and shadow you and your team. And he said, no, I'm going to do better than that. And I'm going to date myself. He said, I'm going to make you a cassette tape. And I don't think you could find anything to make a cassette tape on today, much less listen to one. But he made me this cassette tape, and I equate it to podcast. Anybody here listen to my podcast at all? Anybody listen to podcasts? Okay, that's good. At least we got that. And if you listen to them over and over again, you learn something new. I just sent Bob a podcast that Grant Cardone and Ken McElroy were on, and I've listened to it 5 times myself. And I said, Jesus, I didn't hear that yesterday, because we listen to these things over and over again. But he made me this cassette tape, and I listened to this tape over and over and over again, and I devoured the information. I became a sponge. It became part of me. It became my DNA, who I was. And I went out and I implemented all the things he taught me in that cassette tape. And in the first 9 months of being a real estate agent, I sold 78 houses. I went on to build a team. I sold and put a team together. We sold 125 houses a year, and I did that consecutively for 12 years. 2005 came around, and I saw the market starting to soften up. I had no idea what was going to happen, but I knew that something was going to change. I decided I wanted to go in the apartment business. Now, I didn't just wake up and say, I want to go in the apartment business. I had this picture in my mind. Because when I was in the construction business, I did a lot of work for a couple of large syndicators in the Chicago market. You showed Sam Zell's picture. I used to do a lot of work for Equity Residential on their apartments. And so I knew this. I knew that you could raise private capital from individuals, marry it with a great real estate deal, stay in the middle, and as long as everything went well, everybody made money. Well, 2005, I syndicated my first apartment deal. I went out, I bought an 11-unit building. I was so excited. I put it under contract. Then I realized, holy crap, how am I going to pay for it? So I did something very unconventional at the time. I put a small $45 ad in the classified section of the newspapers, and all it said was real estate investors wanted. And my phone rang off the hook for about 7 weeks. I raised about $800,000, closed that deal, and bought another 64-unit apartment building that we syndicated. Over the next 30 months, I raised about $18 million, bought 4,000 apartments in 5 U.S. markets, built a property management company managing 7,500 units, have built a $100 million company in 30 months. I had over 100 people working for me. The first mistake I made was I grew way too fast. There's no need to buy 2,000 apartments in 1 year, much less 4,000 in 30 months. Scale your business, grow slowly. Because here I thought that I had a team behind me that was stabilizing assets, that was keeping things running, and that wasn't happening. The second mistake I made was that I was over leveraged. I owned 4,000 units, about $60 million in real estate at the time, at 85% loan to value. Now, anybody I work with today and coach, I teach them you shouldn't be in a deal unless you're at 65% minimum leverage, because you need to have that equity. You need to have that piece, right? So if a syndicator comes to you and brings you a deal and they say, oh yeah, we got great bank debt at 80%, run the other way. If a syndicator comes to you and says, hey, we're going to buy 1,500 units in this acquisition, unless they're an institution, run the other way. So you had asked me earlier, what are some things to look out for? And I said, I'll share some of those with you as we go through this. The third mistake I made, I was undercapitalized. I had 100 people working for me. Anybody who's an entrepreneur who has employees, you wonder week to week, how the hell am I going to pay payroll, right? So every week was like that. So we were scattered. Then what happened? 2008 happened. Anybody remember what happened in 2008? It was like being in a freight train at 200 miles an hour hitting a brick wall. Everything stopped. And so we started to come off of the rails. The first collapse happened in the residential market, right? We had a lot of over equity properties in the market, and then you couldn't value properties. Money got sucked out of the market. Listen, I thought it was a recession. Recession would last, 17, 18 months. There might be a 10 or 12% correction in the marketplace. I had seen a couple of those, but this thing lasted 7 or 8 years, a 45% correction in the marketplace. How do you weather that storm? So as we started to unravel, we had loss in occupancy. We were in markets that one of the things that I look at today in markets is what's the employment diversification. If I only have one or two employers in a market, I stay away from that market. We're in a market in Ohio. We owned about 800 units in a market, and there were two employers. We had distribution and we had small manufacturing. These small manufacturing companies made parts for the automobile industry. So they made knobs for radios, dashboards, they made seat liners. Soon as the auto industry got wiped out in 2008, so did all those manufacturers. They all closed up shop. People had people couldn't pay their rent. They moved out of apartments. I remember on a Monday morning getting a call from a property manager in Anderson, Indiana, crying in tears. And I'm like, what happened? Did we have a fire? She goes, no, I have 32 moving trucks in the parking lot this morning. I don't have any scheduled move outs for 4 months. What do you do? So what we started to do was we started to move money from profitable to non-profitable companies. Thinking it was a recession, the market will bounce back. My attorney, my accountant both said it's okay to do that. Just leave a paper trail. When the markets change back, you'll put the money back. You'll be the hero at that point. And that was fine. I didn't break the law. I didn't do anything illegal at that point. Here's what was illegal. I didn't tell my investors. Transparency is very, very important. So again, if you're talking to a syndicator and they don't talk to you up front about being transparent and what they do for transparency, I'd look the other way, right? So transparency is very important. You have to communicate with your investors. You have to tell them everything that's going on. Corey, if you give me $100, I have to be a good steward of that money, right? Because I'm looked at differently today because I am taking capital into a deal that I have. And we didn't look at it that way back then, right? So I didn't tell my investors. So for not telling my investors what I did, I got charged on wire fraud and mail fraud charges for non-disclosure, and I got sentenced to 10 years in federal prison. So in 2013, I went to federal prison in Duluth, Minnesota, and spent about 8 years behind the wall in prison because I didn't tell my investors what I was doing. Now, I made a simple mistake, and I regret what I did, and I tell my story because I don't want that to affect anybody else, right? You can't let your past define your future. So I'm in prison and I'm faced with a choice. I can either, feel like my life is completely over and not do anything, or I can make an impact in the world. And I think I chose to make an impact in the world. While I was in prison, I wrote 2 books. I wrote one on investing in multifamily, one on property management. I wrote an ethics course. I taught real estate investing, property management, and ethics in prison for 6 years. How ironic, a federal inmate teaching ethics, right? I went to college. I got a bachelor's degree in theology. I was on an outreach program. I went into the community. I told my story to small business owners and college students. I met a professor from the University of Minnesota. And hey, could you guys hold it down? I met a professor from the University of Minnesota, and he and I co-authored a paper together that we had published in the Business Journal of Ethics. And for a couple of years, it got taught at the collegiate level for forensic accounting and sales and marketing classes. I thought, you know what? I'm going to go home. I'm going to go home and go into coaching and training business, which I did. I came out. And, here's how this happened, though. And I want to just back up for a minute because I always give this guy credit. So I'm in prison about 6 weeks. I think my life is over. I probably would have killed myself. You have to remember, I went from running marathons to being 35 pounds overweight, and I absolutely hated myself. And just hope I die. But this guy walks up to me one day in the gym. Now, I walked in the gym just to window shop. I was actually looking for somebody. I wasn't looking to work out. I wasn't looking to get involved. And he walks up to me and he goes, hey, look, you have a choice. You have a choice that you continue to walk the way you're walking and battle for the next 10 years, because that's what I had was a sentence of 10 years, or you can try and make a difference. He said, I challenge you, come to my class, start working out, start losing weight. You'll start to feel better. You'll start thinking better. You'll start to look at things differently. And I don't know what it was, but it was that defining moment that hit me. Anybody ever be faced with a defining moment in their life? We have a decision to go this way or this way. That's exactly what happened to me. It was like somebody flipped the light switch. I said, okay. So I started working out. I started feeling better. The next thing I knew, I was in college. I was writing books. I was teaching classes. And it's because somebody made an impact in my life, which is the same thing I want to do in other people's lives. So I came home, I go in the coaching and training business, and I realized, oh my God, I'm going to have to figure out how to underwrite again. So I start building some broker relationships around the country. I start getting offering memorandums. I start looking at deals. Well, I find a deal in Florida, small apartment complex. I go to two of my coaching clients and I say, hey, I think we should buy this. And they both agreed. And we went out, we put together a first syndication in 2021. But here's what's amazing. My securities attorney says, hey, I think I can get you approved by the SEC. I said, that's never happened. Go ahead, do what you want. 3 months later, we never talked about it again. 3 months later, she comes back with a signed letter from the SEC that says they relieve me of any obligation, that I have the ability to go back, raise capital, be an issuer of securities, and a sponsor of deals. So what I do today is I coach and teach people how to buy multifamily, how to syndicate it, how not to make these mistakes, and how to do it legally and properly. And then I wind up getting involved in deals as well, and I raise capital. So, the fourth mistake that I made was I didn't listen to people around me. So I didn't pay attention to the details, and I didn't listen to people around me. There were some people in my life that made an impact in my life and would come up to me and say, hey, I don't like what's going on right now. What I see right now doesn't make sense. I don't like this person. I don't like this. And I thought I had everything under control. So I didn't pay attention to those red flags. So I kind of ignored that, right? Well, what I want you to do is I really want you to pay attention to what's going around you. And if you have somebody in your life that's saying, this doesn't make sense or this isn't right, pay attention to what they're saying, especially if it's a spouse, especially if it's somebody that's really close in your inner circle, because those people make a difference in your life and what they say makes sense in your life. So today, I feel like my world has kind of gone full circle. I think that my story really paints a picture for what what can happen in somebody's life. We can stumble, but we have to get back up. So remember, just kind of avoid those mistakes. The other thing is, this is one of the books I written. It's called Multifamily Investment Secrets. It kind of walks you through how to syndicate, how to do deals. I talk about some creative financing. You guys can grab that if you want. And I, at this point, I typically ask one favor of you. Would you just follow me on Instagram? I know that you have your phones out. If you could, just follow me there, that'd be great. So, Colin, I just kind of want to open it up for questions and let anybody ask any questions in a few minutes. Go ahead, Nick.
I appreciate for sure he was decision in Holly to studying of the economy and both that family and real estate with differences. Well, they tell because being the rents. Then that was right as like going to full relocation which will the market. But what's happening now it's a new trend. And the trend is now low jobs pay out there. And like young families, young practice and adults, there's no demand for housing because they don't have jobs. right? And with AI, it's fascinating last for quite a long, right? What's your expectation? It's a new factor which has not been ever considered by analytics in this market. So what do you think? Where is it going?
So that's a great point. And I think that I just had this discussion with somebody this week about jobs and unemployment. And I think some of the unemployment numbers are skewed because think about all the people that are making money online today that aren't reporting jobs, right? They're selling products online. They're live selling. They're affiliates, marketing for other people, making money by doing podcasts. There's a lot of other ways I think in today's economy that people are making money and staying. I don't want to say gainfully employed, but are working, right? So you're right about the interest rates. You kind of led this whole thing with where the interest rates are, but I think it also means smart purchases. We assume mortgages on 400 units in 2024 that all the interest rates were between 3.5% and 3.9%, and we had 7 to 8 years of runway on each of those properties. So there's assumption deals out there. I think there's been repricing in the market. I think there's assets that have fallen apart. We looked at an asset last week, 118 units in Georgia, in Decatur, Georgia, that is totally vacant. We can buy the asset from the bank for about $30,000 a door. We could put $50,000 a door into it. We're still into the asset for about $10 million below replacement cost. As the market shifts and changes here, that asset will be worth $17-18 million in the next 4 to 5 years. So, I think it's about what you look for in the market. And, there are a lot of assets that don't make sense. You have to watch what the smart money's doing today. And when you've got companies like Blackstone that are buying and they're trading deals today, you have companies that, I have a buddy, his company just raised $250 million from Europe and are starting to buy, assets up and down the East Coast. So if you watch what the bigger syndicators are doing today and the bigger multifamily people are doing today, you see these markets changing. So.
So the gentleman seems to go be very impacted. Then I wanted to open up for a couple of other things here. First of all, the interest rate and privatization of Fannie Mae and Freddie Mac, which is going to have a major impact. And interest rate going down at maybe one or a couple of percentages so that the influx of the money increases. So does when the dollar value goes down and influx of the foreign money to the United States is going to increase. How would you see those kind of things all together?
So interest rates are going to go down. Interest rates always go up and down. I've made money in real estate when interest rates are high. I first got in real estate and interest rates were 11%, and I sold 78 houses in 9 months. I've made money when there's been a Republican in office or when there's been a Democrat in office. It's how you find deals and look at deals. Not every deal's a deal, right? Not every property is one to buy. I don't know what the effect of Freddie and Fannie are going to be on that. I would think if Freddie and Fannie do go private versus being government, that you were going to see a reduction in interest rates because, whoever privatizes them is going to have a real estate focus and they're going to need to bring those numbers down. I think when we're done with this Iran thing, I think we're going to see some things start to stabilize and interest rates come back down. But it's just my opinion too. I think Ali said earlier that, he thought this could be worse than 2008. But I think there's too much equity in the market to make it worse than 2008. There's a lot of cash buyers out there today. And there's a lot of money sitting on the sidelines that, is going to make a difference. So even if interest rates are, at par with a cap rate, if you're 50% LTV, you can make that deal work until those interest rates come down and you can refinance. It's just where we're at in the cycle. I don't know if that answers your question or not. Yeah.
How can you mind? I still don't know a lot of my stuff because you can get this bigger, but we can't.
Okay.
So a lot of places. The dollar value has gone down since a year ago.
Yeah.
Versus euro, for example. So part of investment might be also having usually do a flip investment.
Yeah. There's always foreign money that has an interest in U.S. real estate. I have a couple of partners that raise capital, and there's a lot of money that's coming in from China right now. And it's because they see the opportunity here. China, the Middle East, always see value in U.S. real estate. And so we're seeing some of that money come here now.
I'll put it in the watch. Sorry.
Go ahead, Rush.
So based on your experience and do you have inputs on what markets are any bio and do you have 3 to 5 years?
Yeah, I told somebody earlier, I said we monitor about 40 submarkets. And, listen, if you look historically over the last 20 years, Dallas has been in the top 10 for multifamily for the last 20 years, somewhere between 1 and 10, and this year it's number 3 again. Yeah. We look at markets based on population growth, job growth, employment diversification. So if we're not seeing a positive migration, market probably doesn't make sense. A market like Las Vegas is really overpriced. But if you look what's coming down the road in Las Vegas, it's overpriced for today, but it's not overpriced for tomorrow. But you got to do a lot of work to get there. So does it make sense or does it not make sense? That's a personal judgment at that point. Markets like Central Florida, you still have big migration going there. You still have people moving to Tampa, moving to Orlando in that, Lakeland, Ocala area. So there's all those markets there. Georgia, Atlanta market, Mobile market, they're great markets, right? Because of the fundamentals. Markets like Phoenix have been oversaturated. Markets like Austin, Texas, Houston, they're not markets to be in today. So, my opinion on markets, what we're watching right now is we're watching Florida, Northern Alabama, Northern Georgia, and Dallas and the lower Midwest. So, another market to stay away from is Nashville right now. Tennessee was really hot and then cooled off.
The Vulcan Institute report is really I love those races. So it pays for the guys through and explains all the analytics behind the rankings of all county, the economy, based on jobs, tech. I know the report talks to me. I can show you the website.
Yep. And the other one that's real good is it pull a report from U-Haul of where the one-way trailers are going. So where's the rentals that are going one way? What markets? That's something we watch, a couple times a year. You had a question.
I'm curious. You said you're living right now in Huntington Beach in California. Do you actually buy commercial in California? Because I would be really hesitant to do that myself.
No, I don't. So I don't buy anywhere that's not a red state to begin with, but I want to be somewhere where it's landlord friendly. So when it comes to some of the politics in that, I didn't invest multifamily in Chicago. I bought one deal ever in Chicago that was a multifamily property, and I learned very quickly I wasn't going to make money there, and I went to other markets. So Dallas, I own 2,700 units in Dallas, Fort Worth, and Huntsville, Alabama. We owned about 1,800 units. So we were in 5 different markets around the country, and none of them were, you want to be where it's landlord friendly. I don't want to take 6 months to get a tenant out of my property. It defeats the purpose. So, yeah. Yeah. I agree. Okay. Is that it?
By any chance, Bruce Norris? Do you know him?
I know.
Yeah.
Yeah. I just heard Bruce speak this year. Yeah.
I went down to a conference in Ontario a while
Oh,
ago.
did you?
I was down there.
Yeah.
But I love the end of his conference when he predicted within the next 3 years, mortgage rates will drop down to 1.5%. That was his prediction.
Yeah.
Now, he's got a pretty good track record, on predictions. But who knows?
Well, I don't think he said that about the retail rate, though, did he?
He at the end of the conference, he said he thought within 3 years, because of a whole bunch of factors, then the rate should be about 1.5%. That was his prediction.
But you bring up a point,
Yeah.
Mike. You should explain maybe the difference between the Fed rate and
Yeah.
Yeah.
So there's 2 rates, and I only know a little bit about this. There's 2 rates. There's the Fed rate and there's the retail rate. So just because the Feds reduce the rate doesn't mean the bank is going to reduce the rate. Sometimes those rate reductions are already baked into the interest rate that you get when you go to the bank because they know it's coming. So, I wasn't at that conference. I saw him in January at I Survived Real Estate Conference. And he talked about that. I really think that's a big stretch. Listen, I remember when I used to say, boy, if I could get a mortgage like my parents had, that was 3%, never thinking that we'd go to 3% mortgages, and we did, but it took 50 years to get there. 3 years is a stretch.
My back up to hoping 1980.
16%, and the guy got a mortgage.
Yeah. Yeah.
So, we're predicting 1.5% interest. So we're predicting 1.5% interest rates. We're all being looking for young. In 3 years. I'm going crazy.
I don't remember who it was who made the comment about jobs and AI, Nick. But if you're not using AI today, you really need to be. You need to figure out how to use that in what you're doing. AI is great, but the people that are going to have the best jobs, I think, are the people that know how to use AI and can develop things with it and be able to program. So. Okay, there's my information. I'd love to connect. Reach out to me if you want to have a personal conversation, or if I can help you in whatever you're doing, or add value in your network or life. Let me know. Thank you.